Smarter Markets is back in Lausanne, Switzerland for the 15th edition of the FT Commodities Global Summit. And I'm here with Alasdair Weir, Head of Environmental Markets at Abaxx Exchange. Good to see you. How are you doing?
Dave, as always, it's a pleasure to be back on.
Well, the conference just wrapped up, so I thought it'd be a good chance for us to catch up. I'm curious, you've been out in the hallways. What's some of the interesting conversations you've been hearing this year?
So I think everybody expected this to be a fascinating conference, right? Given all the geopolitical implications of what's gone on in the Gulf and the ramifications for commodities markets. I think even ahead of what kicked off in the Middle East, the ramp up in volatility in gold and silver has meant that we've had a fascinating time, both as an industry and broadly as an exchange. So lots of fascinating conversations to be had around risk management, managing volatility, and kind of working out what the trends are in the industry as a whole.
And I found it, speaking of trends in the industry, it was kind of fascinating this year to me, even with the agenda of the conference, still a lot of conversation around oil, conversation around LNG, a lot of conversation on metals, less conversation on carbon this year relative to previous years. And I really enjoyed, there was a good power panel the other day, and really thinking about how the whole energy market is evolving, becoming, more power oriented, more gas focused, more, carbon emissions and metals. And how are you seeing that conversation about the products that people are interested in right now?
So you're absolutely right. If I think over the last couple of years, predominantly the conversation has been really around energy transition, right? I think environmental markets have had a front row seat in that conversation. What we've seen more recently is a focus to energy security, right? So countries are thinking much more around kind of protecting their domestic economy, moving from kind of a just-in-time type mindset to a just-in-case mindset. And that's meant a kind of deep reflection as to kind of what the energy mix looks like. In Europe, I think that's a lot more renewables. That's a lot more nuclear. In Asia, maybe that's a pivot back to coal in certain scenarios with a lot more nuclear. And so we've seen the shift in conversation, which I think is kind of fascinating to watch play out in real time. From an exchange perspective, I think it provides all sorts of new opportunities. Obviously, we've made a big push into weather and kind of power adjacent markets in Europe. I think that will continue to spread into other markets. Obviously, the US is becoming an increasingly big focus for us, but also in Southeast Asia. It really is kind of fascinating to see that kind of immediate shift in mindset.
And I'm curious, you mentioned the weather markets, you're launching a German solar contract shortly. What's been the response on the weather side, and what's really driving the interest?
So I think commercially we've been pleasantly surprised by the interest from the market, whether that's utilities trying to manage their own risk, hedge funds that are looking at from a perspective, or merchants that are increasingly getting active, sitting between, let's say, those risk takers and risk makers. And so I think, look, obviously we're launching our German solar product tomorrow. We expect this market to grow pretty substantially over the coming years. Obviously, nothing that's new gets immediate liquidity, but I think we're very confident in the way this market's evolving. I think one of the most interesting lines that at least I heard today is some of the Asian funds are now trading the kind of wind gas arb. And we look at it historically as, let's call it, a domestic arb between, let's say, German power and gas. But people are extrapolating that out, and you're having them trade Mongolian wind versus German gas. And I think that maybe is partly led by kind of the increasing computational power and kind of modeling through AI. But the possibilities in terms of trading and interesting arbs is just continuing to grow.
That's Mongolia to Germany. That's fascinating. And it's, one of the themes of this conference was, seeking advantage in a fragmented world, and really this focus on the supply chains and almost like a redrawing of the commodity map. Curious how you've seen people responding to these, threats to supply chains like we've seen in Iran, and also just a world where the connections are different than they used to be.
So, I mean, I think we can look back to 2022, 2023 as the first kind of major geopolitical transition, right? Obviously, the Russian gas impact on Europe was pronounced. That made particularly this part of the world kind of wake up and pay attention as to kind of what the ramifications are from their energy supply. And over the last few years, both politicians and the private sector have been thinking through how they prepare for the next event. Well, we're now in that next event. And a lot of thought and effort's gone into how do they prepare for it. I mean, we've just come out of the CFO panel, and obviously the CFO spent a great deal of time talking about how they manage IM and liquidity. In 2022 and 2023, I think they were probably having a lot more sleepless nights than they were this time around. They all seem much better prepared. That being said, there's still, I think, a lot of change that's due to happen. And turning around an economy the size of Europe's is not an easy thing to do overnight. It's going to take months and years for the European Union to kind of properly rebalance its energy supply. Just look at things like turbine wait times, right? You want to put an order for a new turbine, I think it's 3, 5, maybe 8 years now. So none of this is going to be easy, but it provides plenty of interesting opportunities.
And before you go, wanted to ask you, obviously we're always interested in building smarter markets and all the hallway conversations and the panels that you've listened to. Curious if there's been any sense of, what the market participants are looking for next, or where they see their big commercial needs.
So, and I think the CEO of Trafigura put it best, Richard Holtham, in terms of them being a shock absorber for the world's economy. In periods of volatility, these guys really go to work. I would like to think as an exchange that's helping these traders manage risk, we'll be right there alongside them. I think volatility is expected to remain pretty pronounced for the foreseeable future. And consequently, the kind of tools that the market needs will continue to evolve. We've just got to be creative and nimble alongside the needs of the traders and the broader economy.
Well, thanks so much, Alasdair. It's always good to wrap up with you.
Thanks, Dave.